Hi all, welcome to my YouTube channel. This week we are going to discuss about the broader market, that is Nifty 500, Nifty 50, the leading sectors, and about crude oil, and also there is one key factor why we should be invested in these difficult times and how it is going to benefit us in the long run. Stay tuned for more. So let's take a look at the returns from Nifty 500 over this week. Barring the session on Thursday, rest all days, entire broader market was under pressure due to sellers, and the major impact is because of the war which is going on between US and Iran and Israel. Moving ahead, Nifty 500, it is still under pressure as we discussed. It has already breached the low of January 2026 and now it is on the way towards the lows of April 2025. Now there is a slight expectation that we could be reaching here in the coming days. Now we'll move ahead with Nifty 50. Nifty 50 was hammered down very rapidly. We can see that there's a long tail which has formed. This is purely due to selling. 200 days moving average has been crossed by 50 days moving average, which is not a very great sign for us. So we are in here for a long run. So we are expecting some more selling in the coming days. Currently, we are not in a very good shape. So at this point, from my investment point of perspective, I have put everything on hold. I'll not be moving ahead with any kind of investments at this scenario. We'll move on to the leading sectors. Coming to Nifty Metal. Even Nifty Metal was hammered down this week. Previous week, it had taken a pause. And now we have breached the 50 days moving average on the weekly time frame. And the next stop would be around the 200 days moving average. Could be, possibly. And we could see further selling over here in this particular sector. Moving on to Nifty PSU Bank. We can see that Nifty PSU Bank has been under pressure for 2 consecutive weeks. As a result, I have sold my holdings from this particular sector. And now my next accumulation point will be at 8053, and that totally depends on the global scenario. We'll move on to Nifty Energy. One great sign with respect to Nifty Energy is like this week it has taken a pause. Even though there is selling pressure for the broader market, Nifty Energy is not under that pressure. It literally hit the highs from the previous weeks and again tried to cross it above, and I have resumed my investments into Nifty Energy clearly. So at this point, I'm slightly accumulating the points from Nifty Energy point of view, and I'll continue to invest as long as January 2026 low is holding. So until then, I'll continue to invest provided there is no selling pressure in Nifty Energy. So that is the kind of risk management I'm having. Now we'll move on to the crude oil. You can see UK crude oil, US crude oil, both had given a strong breakout this week. We had seen that the crude oil prices reached $119, which is not at all great sign for Indian markets. And that is the prime reason that we are expecting the selling pressure at this point of hour. Since this is a big breakout from its previous lower low, lower high structure, I would keenly watch this particular sector of crude oil and wait for the next steps of action. So having said all this, we'll move on to the next interesting point. This is with respect to Nifty 50 and how it is going to be behaving in the future. And over here I have an indicator called ROC, rate of change. And I would give the credits for this entire chartings to Investors Capital from Twitter, where they had shared this information earlier and had noted it down. Now we can see that I have mapped the ROC against Nifty 50 on a monthly time frame. Basically, it's a monthly time frame chart, and historically, whenever the ROC is below 0, that is nothing but 18 months rate of change is below 0, and post that for the next 18 to 36 months, we have seen a bull run. This pattern has repeated in 2012, 2016, 2020, which was the COVID crash, 2023, and today we are in a similar phase. So I expect this to repeat. As earlier mentioned, history will not repeat, but it definitely rhymes. And the patterns will emerge over time. It is not that we are going to face a similar strict pattern every time. So as and when the pattern emerges, we need to take a reference from the past, which is called backtesting, and we have to act accordingly for the future. That is how the investment in stock market is highly aligned about. And this is the observation what I'm making. At this point, I will wait for 2025 lows, which was mentioned earlier in my charts. So the pivot is around 21,743. So in and around that number, I'll start accumulating with respect to Nifty, and I'm expecting Nifty to fall till the range of 21,800 or 21,900. My accumulation starts soon after 22,000 is broken straight away. This is my plan of action for the coming weeks, and like, share and subscribe for more. Thank you.